There are 103 new insider stock trades. Almost every single one of them is totally useless, but we're looking through them all to find those unusual and abnormal insider trades that can help us outperform. Take a look at the number of insider purchases versus sales overall. As we can see, actually a much more bullish day here in terms of just the percent of insider trades that are buys. But what we'll notice is when we go take a look is that a large portion of those insider purchases are just public offerings or private placements, so not actually really discretionary or super insightful purchases. So overall, not actually as bullish of a day as it might appear just looking at this chart, but nothing too out of the ordinary really. As we've mentioned, we're entering earnings season, so we're going to see fewer insider trades coming in overall, and more of them will be scheduled. But if we do find a handful of those unscheduled insider trades, they can be even higher signal as we kind of enter earnings season here. So let's go take a look at CEOWatcher.com. We'll do purchases first, look at all the most recent. So we'll start up at the top here with ZBio here, Zenas Biopharma, which if we take a look at these guys, they actually have pretty good returns here. Fairmount Funds Management over, I guess they don't actually have very good returns, though I guess over the very long term, maybe they do because of, as you can see, like all of these stocks are up since they bought them, but probably more, a longer period than the 1 year basically that we track has passed. So I don't know, this is one of those weird cases where it's just like a timing thing, right? Because we are tracking just very specifically at like 1 month time frames, 3 months, 6 month, 1 year. But if you actually go look at their returns, some of these happen, these are going to close in on the 2 year mark right here, which should help this 2 year return go up quite a bit. Some of these are a little over 2 years, and maybe it just took them longer than 2 years to start to go up or whatever it might be. But overall, I would say, maybe not quite as interesting of returns as I initially thought, but, semi-interesting nonetheless. However, this is going to be many where a couple things to take a note of here is anytime it's a biotech company that's gone up quite a bit, you can just kind of assume that they did a public offering of some sort to try to raise money. And then if you see very, what do you want to call this, like an even number basically, like straight on 19, that's also another sign, because normally if you were to go to the market and buy 316,219 shares, you would not be able to buy them at exactly $19. So not actually in the news here, we're not actually seeing anything, but I bet we will go find, if we look at like either press releases, or we can look at press releases maybe. They announced some licensing agreement recently, into a funding agreement. So let's see what they have here. Funding agreement, upcoming launch, announced the Royalty Pharma will provide $300 million in funding, so that doesn't actually look too crazy here. I mean, I guess based on this, it doesn't look like, but I still just think also if we've got multiple insiders buying now too, so let's go take a look here at this guy's filing as well. So 2085, so actually a little higher, so I guess it's possible that this isn't actually part of a funding agreement here. Let's see what this was. Did we have any? So this one does look like it's part of a purchase agreement in some way, which we can see here on October 7th. The Leon Mulder Revocable Trust entered into a securities purchase agreement. This one is a purchase agreement, so this one's kind of an odd setup here. I'm not actually 100% sure what is going on. Well, either way, I mean, even if this isn't a purchase agreement, which I still kind of feel like I don't feel like this was an open market purchase, just again, being exactly at $19. But I guess the other thing that would make me say this is probably not an open market agreement is the fact that the stock is at 27 and they're buying at 19, which is obviously a huge discount you would not be getting if you were buying on the open market. So overall, I'm still going to put this in as like this. There was something this was some sort of agreement or a private placement or something like that. These guys did not just go buy the stock at $19 on the public market. And as always, if you are able to, if anybody ever allows you to just buy a stock for like a 30% discount, please go do it. But unfortunately, we don't get the same opportunities that they do. So overall, I would say both of these ZBio ones not particularly interesting. And just quickly, we'll go through and look at a few more. We can see all these commercial bank corps, which we can see a handful of purchases here. Recent IPO. So again, that's not one that's going to be super interesting. And then same with the CPS Technologies. Bunch of insider buying, and frankly, a bunch of insiders that actually have pretty good returns here, but they closed a $10 million public offering here. So again, overall, I would say even with, I mean, the only reason maybe you want to go take a look at CPS Technologies is you can see a bunch of good returns here. 60% average 3-month returns, 24% here. So maybe that would convince you, 40% up here, to go take a look. But generally speaking, just historically speaking, I guess actually is more accurate. The public offerings and private placements and stuff don't perform particularly well. So we're going to just skip right over those. There's also something happened down here at Auburn Bank, but under $2,000, not even worth spending our time thinking about. So we'll move on to Agree Realty Corp, which is, if you've watched my videos before, you know I tend to avoid these REITs. They're just not interesting to me. A retail REIT here, this is like an $8 billion retail REIT. Couple of buys here recently. We've got got, let's see who's all buying. We have, I believe, the CEO and then maybe the chief growth officer or something buying the stock. And then now we've got a director buying the stock as well. All of them historic returns. They all have pretty okay, maybe. Let's see. So decent historic returns for the director and for the chief growth officer. I mean, slightly positive, but again, I mean, look at the consistency of these. The stock doesn't move much. REITs generally don't move much, which is kind of why I'm not always a big fan of them. Though here, 40% returns over 2 years isn't terrible. Though, still going to be lagging the S&P. But for a REIT, that's also paying you, some percentage of a dividend that could be, maybe that's up your alley. So if it is up your alley, maybe this would be interesting to you. But the main reason I think it's more interesting is not just you've got cluster buying by some insiders with some decent returns. On top of all of that, if we go here, the main thing is their earnings are coming up on the 21st. And frankly, that's in literally less than 2 weeks from when these purchases were, which, I mean, almost certainly I wouldn't think insiders should be allowed to buy the stock just a couple of weeks before earnings. And in that case, I mean, the books have been closed now for probably, over a month. They probably closed at the end of August. And now they have, and these guys are buying just, a month after books have closed and then just a couple weeks before the earnings. So the one thing I will be interested to take a look at here is just to see what happens at earnings. I would not expect a big pop from the stock. I mean, these REITs just don't move that much, but I would be pretty surprised if earnings came in poorly with 3 insiders buying the stock right before earnings. They do also mention their last earnings call was pretty bullish, actually. They mentioned investment volume more than doubled year to date. They have a strong pipeline accelerating into Q3. They raised their full year guidance. What else did they mention here? Development pipeline is expanding. Portfolio continues to grow. Tenant quality remains high. Occupancy rebounded. Core FFO per share is growing steadily. AFFO per share is kind of flat but remains steady. And then they actually guide to higher AFFO per share as well, I believe, down here. So they actually raised the guidance there a little bit, and then they raised the full year investment volume quite a bit. They did increase their dividend a little bit, which I think it's probably around 4 or 5%. Whereas this is how infrequently I look for dividends. Where is it? 4.3% here. So overall, just strictly from a REIT standpoint, could be interesting. I'm not interested in REITs, but I will be interested to see what happens after those earnings when you've got insiders buying. I mean, literally 2 weeks before earnings. Just doesn't seem like that should be allowed. We've got ASIC Gold, which we've seen 100 times. Again, we've just got now Saba Capital Management continuing to buy more of it. Looks like it came down a little bit yesterday, actually, but they are up a ton since they started purchasing there. Another kind of interesting one here at ATYR Pharma, and the only reason this one is interesting, so if we go here, we've got this director here, which a pretty big purchase, which is always one thing. Percent of holdings, when you see this number being pretty big, that can be a good signal for insider purchases specifically, less so for sales, but for purchases, we found that big percent holdings are positive. Bought 1 million shares, 911,000, increased holdings by 90%. Go check here, not part of a 10b5-1, not part of like a purchase plan or anything. They were purchased between 85 and 95 cents really, so didn't get the greatest, must not have had a ton of volume because didn't get the greatest fill there, but stock is still traded, well, it closed yesterday at least at this price. But what is going to make this interesting, so if we look at ATYR, obviously the first thing you'll notice is it fell off a cliff here. No real insider trading, but the main thing, it fell off a cliff because they had poor trial results from whatever their drug was. Stock fell from $6 down to $1, so a huge 80% plus decline there, and then it actually continued to fall a little further all the way down to about 70 cents. And if we go look at what I want to show you, which is Cassava Sciences, which had a similar one, and the reason that these two are similar is that ATYR was actually a pretty popular clinical stage biotech stock, as was Cassava Sciences. This was kind of real popular because Martin Shkreli shorted it, and then obviously was pretty correct. But this one was very, very popular. Stock then fell again after more bad news. But after all of this bottoming out, the stock was way down 90% or whatever it was, and then we saw some insider buying come in right here, which if I zoom in a little bit, we saw the CEO buy right here. So two things that we want to look at. One, if you just look at what the price was at, it was all the way down at like, what did it bottom out at here? 120-ish. And now the stock's at 388. It was above 4 a second ago, but if we look at open today, but it's up over 200% since the bottom, which is kind of unusual because like, why would a stock that had failed trials with no real positive possibilities be going up so much? But then on top of that, the CEO bought right here, and the stock popped 50% in just one day after the CEO bought. And then actually from then, the stock was still close closed at 326 that day. And so even though the stock is now, fallen below 4 again, it's still up 19% since after the close, after the CEO bought it. So this just kind of shows the biotech industry has gotten pretty popular recently, especially among, retail investors and individual investors. Just a lot of drug trials have been coming out, some huge winners that have been pretty popular. And then you've got Martin Shkreli shorting some stuff like Cassava Sciences, which picked up some heat. So we now have kind of a parallel here, which obviously all situations are different. Not always great to try to pattern match like this, but we have a situation where a popular retail clinical stage biotech stock fell massively after bad drug trials. The stock then bottomed out and it started moving in the right direction. It was already up, almost 100% or so, 80% probably before the CEO bought. You then have an insider buying the stock, which caused a pretty big pop, and then the stock has continued on after that and is now up over 200% since the bottom. We have a pretty similar situation here. The difference being obviously this is a director buying, not the CEO buying, but as you can see, a recent dip because of a failed drug. Stock fell massively. Stock then actually continued to fall after it fell 80%, then fell another, 30% down to around 70, has now started going in the right direction. Now we have the insider buying. The stock popped a bit on the insider buying, about 10% there. So this is just a pretty similar setup. There's no real, I guess a couple of the potential catalysts here is they did try to mention after their previous calls. I don't know how much of this is actually correct versus them just trying to spin a story, it kind of seems like they're grasping at straws here. But they did a call where basically the primary endpoint was not met at all due to high placebo response, which, they mentioned they were surprised by the higher placebo response. You saw some retail investors try to say, hey, the high placebo response is actually throwing things off, but I don't think that's really the case. The placebo also on, when you have these longer term drug trials, the placebo could also just be how people generally react, post a year after, whatever is happening, whatever the ailment that is causing them to take such a drug, that could be, just naturally the response anyway. So failing the placebo definitely, it certainly failed. However, they had some positive improvements in quality of life stuff and steroid withdrawal with, 52% steroid free. So, and some lung function maintenance, I guess. So they do try to push this a little bit, talking about hey, some of these secondary endpoints are interesting. We think we might actually be able to get FDA approval for some of these secondary endpoints. So maybe, it seems a little bit grasping at straws, but obviously any positive news regarding those kind of things coming out would be a positive. The other thing is they're gonna update some cash guidance at Q3, and they do have Q3 earnings coming up November 11th, which again, the quarter would have ended the end of September. So this director buying the stock, if he had any inside info about, how the quarter had progressed, he would already know that. Clinical stage biotech companies, I don't know how much there really is to know about the company itself. It'd be more maybe about FDA news or that kind of thing. So overall, the main thing here will be that you've got earnings coming up in November 11th, and we'll certainly get some updates on some things around then, which could be a catalyst. But besides that, this is pretty much strictly a momentum play, kind of seeing if we don't get a repeat of what happened at Cassava there with popular retail stock falling way down, starting to trickle back up, and then maybe the insider purchase. And then if we see more insider purchasing coming in, obviously it could be a little catalyst just to get more investors involved in buying the stock. So pure momentum play. This is know what you're getting into if you wanted to get into something like this. Not a value play, not a bet on the company turning things around or anything. Simply a momentum, which obviously we are way below. It's not even a long-term momentum play, which makes it even riskier. Normally you do 200-day, but the 200-day doesn't quite work when you have a gap down like this. So you'd probably want to add something much shorter here, 20-day or whatever it might be, and see how and then see how the stock reacts to that trend line maybe. But pure momentum play. Anything else interesting here? Another one that is pretty interesting just because of this guy's insider returns previously is this Zevo Biosciences here. We got the stock down 35% in the last year, though it is up 167% in the last 2 years. Some pretty good timing by insider purchases, which you'll notice I guess I am looking just at this guy, but pretty good timing here as you look historically at all of his purchases. Maybe not quite as good back here. He's kind of all over the place, but buying dips and especially over the last 2 years, he's kind of crushed it, which we can just see. Up 700%, 100, 50, 12. So, and then obviously before that, the stock has been down, but if you look solely at his 1 month returns, 53%, 52% for 3 months, 57 for 6 months, and then 160 for 1 year with, 60-ish% win rate. So overall, a pretty high signal by this insider. Also, his second largest purchase ever, which his largest one ever was his most recent purchase, which was August 23rd, 2024. So yeah, oh no, this one was smaller. He had a bigger one down here. This is the one I meant. His largest, so this is his second largest purchase ever, his largest one being in 2022, February 16th, which the stock actually performed poorly. That was right around here. So yeah, stock actually, that was a pretty terrible timing on that purchase. But I guess his third biggest one was right back here, right before the pop. But here you've got, just from an insider's standpoint only, this is a pretty high signal just based on this insider's historic returns. Tends to time them pretty well. However, you start to run into some issues here when we go to look at the stock, which is no volume at all. So there's just, the stock could go up quite a bit, but there's no trading volume. So I'm not interested in playing in a stock that's trading 200 shares a day, or, yesterday I think it traded 600 or something. Just not interesting at all to me. The other thing would be if we look at just their financial statements, point to like $200,000 in revenue. And then the last quarter, I think they did like $50,000. And the numbers are so small, it's almost hard to fathom how terrible the financials on this company are. Let's see here. I mean, current assets, they have less than $10,000 in cash. They did, $53,000 in revenue, doing no revenue before that. So I guess they at least went in the semi-right direction. Lost $1.7 million in the quarter, which they have cut costs quite a bit. But I mean, still, this is we are early stage. This company has basically $0 in revenue, and they're valued at about $50 million. And they could go bankrupt at basically any moment. They have no money. They have to continue to raise, get pre-orders, dilute their stock, whatever they can do, take out loans. Just a brutal company. However, I will say, if this ever did start to get some volume that made it actually interesting enough that you could do something with, the CEO did write a letter to shareholders recently that was very bullish, or I think the argument you can make here though is like very promotional, because he needs to raise some money most likely. So, take it with a grain of salt. But they talk about how they achieved remarkable validation of their algae technology after a request of a prospective customer. They demonstrate that their algae had on average nearly doubled, blah, 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 whatever their algae does. But, we believe this breakthrough sets us apart. They then go to talk about the market opportunity. They talk about some of the tailwinds here. The success supposedly has generated some substantial interest across the industry. Again, let's just see some of that interest actually come through with some real revenue, and then maybe we could believe what's going on here. They also, additionally, with such excellent results, we intend to negotiate with major companion animal product companies. I mean, they plan to, I guess. Great. Again, come back to us when you've started actually making progress on some of those things. And then they do mention down here, I have decided that now is the time to redouble our efforts to help the world understand what Zevo does and recognize our unique investment opportunity. Over the past year, both the board and I have personally invested in the company. We believe this demonstrates our deep conviction with today's share price is undervalued. So all of that actually sets up, you at least have a story here, right? Like maybe if you do start to see some of this revenue come in, you start to see some orders being signed, this thing could obviously start to move in the right direction. And it does look like maybe this director buying the stock has some confidence in that, but no volume and a truly horrible company from a financial perspective kind of makes that one just too hard to play. Let's go take a look now quickly, see if we see anything from sales. I think the first thing we'll notice in sales land is that Fluor Corp, or however you pronounce this, Fluor, whatever, is now fully sold out of NuScale, which surprisingly they sold how much was this? $600 million of the stock, and it didn't really do anything to the stock price. Stock stayed pretty flat, slightly up during that point, but they're now fully sold out. And again, we've looked at quite a few of these kind of power generation companies, a lot of insider selling going on there. Obviously super hot industry, and we'll see how this earnings season goes, but I wouldn't be surprised if they report really strong earnings again and we continue to see them go up. But a lot of insider selling that's just worth keeping in the back of your head, if and when markets do start to turn around. 10% owner here selling at MACOM. I don't know if it's super interesting. Her timing seems pretty consistently just selling in batches and doesn't seem to correlate much with, what the stock price is going to do. So I don't know if there's anything interesting for us to do there. A bunch of 10b5-1 sales. Take a look at, this is going to be a 10% owner, so I'm not super interested in them selling a biotech stock here that's way up. Anything else? MicroStrategy selling again. Her sell timing not particularly great. I don't know if there's anything super interesting to take a look at there. And there's no group selling that I could see at MicroStrategy. Overall, not really a super interesting day here. I think here maybe we'll find something interesting with Kevin Bitterman at Disc Medicine. Again, another biotech. Just all sorts of biotechs have been kind of on our radar recently. Looking historically, he did a bunch of selling back here that obviously didn't work out. So then kind of questions how this one's going to do. He did obviously obviously the stock must have failed the trial back here, and he did sell right before that. So I guess that'd be a good thing to go take a look at here, which I haven't actually done, is well, let's see what this says. Dismiss and submission of a new drug application for accelerated approval. That, I mean, this would be, if you were going to take a look here, the only thing I'd be kind of interested in is this stock, does Iron have, or Disc Medicine, I guess, have a upcoming trial result that could cause this situation to happen again? Because if you can, you know, time up your sell to be a month before news comes out that drops the stock 50%, which this might not actually have been a drug trial. I don't know exactly where they're at, but you know, stock dropped 50%. So if that's going to happen again, then this could be an interesting insider purchase. But, you know, did a bunch of selling back here. That's really the only thing you're going to have here, is just maybe go see if they've got an upcoming trial result, and it might be worth a play. But I don't know if they're, you know, always pretty risky, and I don't know if there's much to do there. Overall, I think, I mean, not a ton of insider trades today, not a ton that are interesting. You can head over to continue, I guess one that's kind of interesting, continued selling here. I mean, Vita Coco, the amount of selling that's been going on here is kind of insane. Let's pull out the chart here. Tons and tons of insider selling. The earnings estimates are falling. The stock is fairly expensive. I think this is a pretty interesting one, just from on a bearish side of things. Obviously, momentum's still heading in the right direction, so you'd want to maybe wait for that to turn around. Let's see what the 200-day looks like. Yeah, you might want to wait for that to kind of come down below this amount, but as you can see, you know, earnings flat to slightly down, bunches of insider selling, and then valuation, they're going to be kind of on the upper end here of their valuation. So I think this is kind of this could be an interesting, you know, short play, but maybe wait for it to get a little closer or below that 200-day if you really didn't want to, you know, fight the momentum there. But you can head over to CEOWatcher.com and look through all the trades for yourself. Don't forget to like and subscribe, and we'll see you next time.